Good morning. Good morning. Spot Gamma actually came out with their AM edition founder's note in an early, timely manner, which is always nice. We don't always get it so early. It's worth a read if you get a chance. They're laying out some fairly obvious levels on the SPX for downside support. Talking about some options levels, 5250 for the SPX, and if that breaks, then 5200. They expect really strong support at 5200, and breaking that offers 5000, and then that's where they're also expecting very large support. 5400 still continues to be significant resistance. They lay out some SPY levels that kind of go with that, but 5400 is the call wall, and they expect that call wall to hold even after FOMC, which I found interesting. It very likely holds into OPEX, right? Options expiration. It's the third Friday of the month. You never have to guess when it's going to be. It's always the third Friday of the month. Having those numbers gives you a chance to do a number of things. Butterflies are really cheap, really cheap. On the SPY, you can often get butterflies for a penny. On the SPX, depending on where you build them, you can get butterflies for 5 cents, maybe 10 cents. These are really strong levels, and knowing that we can go out in time, you know, all the way out to the 21st allows you to sprinkle butterflies all over the place. And since it's SPY and SPX, you can use, Monday through Friday expirations. You don't have to only do Friday. Take a look around if you don't have any butterflies on. Now, keep in mind, butterflies are cheap because they have a low win rate. Everything in the options market is really balanced. The lower the probability of success, typically the cheaper the trade is, or the less risk there is. Inherently, that's the way it works, like a balance scale or a teeter-totter. If the risk is high or the cost is high, generally it has a higher win rate. So some edge, if you're trading in options, is to build trades that are perceived to have a low chance of success, but building it at a key level like major support, major resistance. The options market doesn't know that that's a major support and resistance level. And so the butterfly will still price as if it's a low probability trade, when in reality, it's actually a higher probability trade. I did an entire year of mechanical trades on the SPX. Debit spreads, outrights, and butterflies. Butterflies are supposed to have a 10% win rate, and I was running at 30 to 35% win rate. And I know, I get it. There's a lot of people who are just hung up on winning and losing, and they hear 65% loss rate and they think, well, screw that. Who would ever want to trade that strategy? When the losses are really small, say 10 cents, 15 cents, and the wins are big, anywhere from $2 to $18, I mean, come on, I'll risk 10 cents to make $1,000. Just saying. So something to take a look at. It's not always the win rate, right? It's the size of the win and the size of the loss that matters. Good morning, everybody. I did post the founder's note. So, if you want to read through everything they had to say, it wasn't a very complicated one this time. If they start getting into GEX and the vols and that sort of stuff, just kind of, pass over it. Really focus on their conversation with the SPX and that 5400, 5250, 5200. They're laying out some really good levels, and you can use those on the ES2 from the idea of just think about what they're saying on all-time highs, levels of support, where that structure is. Options on the futures, if you want to sell puts and sell calls, the margin requirements on futures are way smaller than they are on the SPY and the SPX. If you've ever tried to sell a naked option on the SPY, you need what, $40,000 minimum at least. Sell a put on the ES and you need like 15, 20,000. Do it on the MES, you need less than 10,000. So, you can sell naked puts and calls, and naked options are more easily defended than spreads are. We've got a lot on the table today, including rate decisions coming out of Canada. It's Canada's FOMC, basically, if what I said confused you. Hong Kong is flat, Japan right behind it. Then the Dow, really nothing out of any of that. Then the Russell, also in wait mode. S&P up 0.25%. NASDAQ closer to 0.5%. There's a little bit of a tell there. If it was a really bullish or a really bearish day, the S&P and the NASDAQ tend to have a common percent change, right? They'll both be up 1%. They'll both be up 1.25%. When you see one up twice as much as the other, then it's a stock pickers market. It's more of the Mag 7s carrying things, and the S&P is just kind of being dragged along behind. So we've got more unemployment numbers. Yesterday it was job openings with JOLTS, take this job and shove it numbers. Today it's the ADP report. Tomorrow it's going to be initial jobless claims, and on Friday it's the big jobs report, non-farm payrolls. So this whole week is nothing but jobs and jobs and jobs, which goes to the heart of what the Fed is trying to do, which is slow down this economy. So we've got the ADP, we've also got ISM services and PMI, and we've got the Bank of Canada rate decision. So as I said, it's a very busy morning. The thing is, though, it really is all this morning. So by the time we get into the afternoon session, kind of got a free run, right? There's nothing there. If we can set a solid bias before lunch, then we could look for, that lunchtime consolidation and come out of that in one direction or another and have a really nice afternoon. It's kind of what I'm hoping for. We could see some data coming out of Japan tonight on that bond investment right there, especially tying it back to their comments that they made the other day with the 10-year auction, the JGB 10-year auction that they just had. So if you're trading in the evening, watch the clock on that one. Notice the time frame on that, by the way. I always talk about watching the clock and how governments are lazy and they'll do things on the half hour and on a new hour. Sometimes they'll do it on the quarter hour. And that one isn't any of those. It's not every 15 minutes, not every 30 minutes, not every hour. It's 10 minutes before a new hour. It's a weird time. Yeah, I would give them the same weight. You know, it's no different than um, other data prints that we get at 10 a.m. You know, this isn't the first time we've ever had econ in the middle of the day. And if you've never shifted before, why would you want to shift today, right? That would be kind of the idea. Although that phrase that I use, you know, where I say if we haven't broke out by 10 a.m., we're not going to, and that means we're going to wait until after lunch to see a breakout. That phrase wouldn't apply today, because if we haven't broke out by 10 because they're waiting on data, then we get data at 10 and then we break out. That's very likely a real breakout. But generally, if we haven't broke out by 10 and I start to see a breakout at like 10:15 in the morning, I usually assume that's a fake breakout and that we're going to come back in again. Because if we haven't broke out by 10, we're not going to. But the missing words there when we say the whole phrase is if we haven't broke out by 10 a.m., we're not going to unless there's news. So there is that. But I would still mark out my levels. You just got to keep in mind with all of this economic data, they're going to hedge it. They're very likely going to hedge it to the eyeballs, and then it won't matter which direction it goes because they're hedged. The thing is, we're not seeing that hedging yet this morning. Got the ES here, and there's no market maker move. The volume's a little lighter than it was yesterday, but still got really great volumes at 90. So they're not sitting out and they're not hedging yet. Now the economic data is a little later in the morning, so that could be a reason why they're not hedging. But we can use that on the other side too. If they're not hedging, then maybe it's because they're not concerned about it. I'm concerned. I think the data prints today can really move this market, but if they're not concerned, maybe they know something we don't. So we still have that line in the sand, 5,200 bullish above, bearish below. Look at that on the daily and the weekly. Here is the weekly. We've got that solid trend line still underneath us. These 3 candles, 3 weeks with these long wicks showing that this was defended below 5,300 and it's been bought back up again. So a lot of protection around that 5,300. We've got below it, but we've seen them come in and defend it and run it right back out again. We're going to keep that 5,200. I'm not interested in moving that up. At most, we could add another line. Major support. I don't like using that word support there, though. We need a better word, because that's the level that they start to defend at. And you can see 3 weeks in a row, we've spent time underneath that level. Support isn't the right word, but I don't have a better one. That's just a line in the sand. If we get below it, we see them run it back up again. They do defend that level. So we'll just call it an area of interest. Key level. So far, we don't have an answer yet. Is all of this just a pullback before we continue to go higher? Or is this the start of a new downtrend? If we're using OCR analysis, then we've got our lower high and our lower low and our new lower high, but that hasn't turned around yet. So we wouldn't call this our lower high. until price falls away from it and leaves it like it did back here, shows it as a pivot. As long as it's still rising, it's still rising. So keep our eye on this, see if it dumps down. If it leaves a pivot behind like it did back here, then we'll have a new lower high. Until then, we've just got one lower high and we've got one lower low. We're back inside of this candle, which is really important. We're still struggling with this candle. We have to get out of it. If we were to mark all of this, capture a half back, we're above that. Just got to keep the pressure on. Now, it is a little concerning if we consider wicks across these last 3 days. 5,300 may be holding as an area of interest. But 5,311 has been the line in the sand, and we've been selling back off again. It's been difficult to get through that level ever since this sell-off here. So today, so far, we're holding above that level. But we've had 3 days in a row where we've tried this, and 3 days in a row, we've sold back out of it. A price pillow, huh? I think someone's still dreaming about sleeping. I did not want to get up this morning, I'll tell you that. And that's not normally me, but I think I'm still trying to get over this junk that I got. So 3rd time's the charm, maybe 4th time the charm. 5,311 is a cog line. We can mark that as perhaps a warning level. If we cut back down below 5,311, then we'll aim for 5,300. If we can cut below that, then there's another cog line at 5,292. We can focus on that. The channel is overlapping again. We've had overlapping channels since Friday. Each one just working its way up. It's a wide channel, so we don't expect that today is going to be an expansion day. We are above the weekly pivot, and so far we're keeping it. We've got an inside week breakout. It's not really the right way to say it. So far on the week, we've been holding this range, and we've broke out of that. If we think about it from a week-to-week basis, we've already been broke out of last week's range. Oh, excuse me. No, we haven't. We're still inside last week's range. So that's what we need to get out of. But for the high that we had set so far this week, we've got new weekly highs. That's the phrase we're looking for. We are coming into an R1. This matters from the context of how we come into the RTH open at 9:30. If we're not above that R1 by 9:30, then the R1 is very likely going to act as resistance. We'll bounce off of it, and at that point, we could attempt to come back down and tag this pivot point, which right now, this is a missed daily pivot. We haven't hit it. An MDP doesn't count until tomorrow, but it's in context, it just, we're nowhere near it either. So if we can get above the R1 level before we get into the RTH open, we're much more likely to stay above it. Now, that sort of statistic comes right out of floor pivot books and education and background that comes from floor pivots. But we've got all this econ that we were talking about. And instead of an 8:30 econ, which would get us done and dusted before 9:30, before the open. Now we're going to be looking at a pivot at 9:30 and then have econ after that. So while statistically, if we get above the R1 before 9:30, it would act as support. I wouldn't lean on that statistic on a day like this, where we're going to get econ at 10 o'clock, and support doesn't matter when you get econ. Support, resistance, pivot points, nothing stands in the way. It's all liquidity at that point. Fear and greed, and things are going to move really fast. We've still got room before we get to the ADR half. Generally speaking, when we get this close to an ADR level, we usually assume we're just going to go ahead and go there. They'll act a little bit as a magnet. We haven't got there yet. So, when we get there, if we get there early enough in the day, it opens the possibility that we can go to the other side by the end of the day. But we have to get there first. We are well above the volatility trigger, 0 gamma. The put wall is at 5211 or 5200. It's another way to think about it, just that significant level that we've been talking about. We've got the 10-week underneath this, the 20-day, the 10-day, and the 3-week. All of our moving averages are underneath this. We didn't really get a big move through the kill zone. The kill zone is between 2 and 4 in the morning. I didn't name that time zone. It was named long ago. Some mathematicians were running statistics looking for the biggest move in a 2-hour window within a 24-hour trading day. I know that sounds confusing, but just kind of think it over nice and easy. In a 2-hour stretch of time, within one single trading day, statistically, where does that biggest move happen? You would think it's the open or maybe power hour, from 2 to 4 or from 9:30 to 11:30. But statistically, consistently, the biggest move in a 2-hour period is between 2 and 4 in the morning. And it's nicknamed the kill zone. There's a lot of profile players like Jim Dalton and that group, footprint charts, TPO profiles. And they really focus on the London session, the Asian session, and then the US session. Each one of those with their opens, highs, and lows as pivot points that get marked out. And you'd be surprised at how often those pivot points come into play, especially if you've never marked them out before. We don't have a market maker move yet, but we want to keep track of this front number, the 0 expiration. If it gets higher than this next number out, then we've got a market maker move. We don't have one yet, but the econ that we're worried about is later in the morning. So, usually when we get econ at 8:30 in the morning, they're already hedging at this time of the day. But with everything later in the day, it could be just that they're not hedging yet. I say they're hedging. It's just not hedged enough yet. We're not seeing it. There's their hedging activity. The OPEX that I mentioned at the start of all of this, the third Friday, it is also going to be options expiration and futures expiration. We're going to be rolling out of the M and into the U, or into the September contracts, which is where the ES futures, when they changed everything, that's the month that it started in way back when, which is why they call it the spoos. I don't call it that. That just sounds ridiculous, but that's what they used to call it because it was the SEP and it was for the ES. And I don't know. People just really suck at naming things. $10-day, 30-minute volume profile with TPO. The TPO point of control and the volume profile point of control are lining up well. We're still not going to lose this volume from the point of control until next week. So if we want to see this point of control move, then we've got to build a volume up somewhere else. We've been doing a really good job around that 52.90 range. There's a cog line at 52.92, but this is a high volume node, or what I like to call a price shelf. This is very likely where the point of control is going to move to. Either because we go down and put some volume down there, or because we lose some volume, but that's still going to be later in the week. By Wednesday late or by Thursday morning when we come in, this point of control could be gone by that point because we would lose these two places of volume. Still, it's more likely that this is the volume that we need to move. And if we don't go back there and down there to visit this area, then we're not going to see this point of control shift anytime soon. We're coming into that level right now. $53.23, $53.22.5, close enough. The 5-day, 5-minute here shows that nice bell curve. We're just waiting on data. It's really clear. We can see that we didn't spend very much time up here looking at the TPO, but we did get a significant amount of volume up here looking at the volume profile. It's one of the benefits of looking at these two side by side, especially along the lows or along the highs, when we would have a very skinny TPO and we would have, say, a very skinny volume profile and then a large high volume node area. Now, this isn't a very large high volume node, but considering the volume that we had last night, what we were looking at this morning, that's not too bad for a value node or a volume node. Shows we ran up into a ceiling, right? If it was to the downside, then we'd call it an iceberg. We do have a new VPOC level. So we'll just take this one that we had hit yesterday, move it over to this level down here, 52.85. So a break to the downside should put us into that level. $52.38 is the weekly expected move on the downside. We didn't get there. 53.60 to the upside. Still on the table. Both of these levels still on the table. Make no mistake about it, we can go there in one day. We can make a move like that from, Sunday night at the open to Monday by the end of the day in a 24-hour trading cycle. We can go from the start of this thing to the edge. We've even seen it where we go from the bottom to the top or from the top to the bottom in a single day. We've seen those kind of moves before. So never doubt the S&P. Here's one where we got really close to one side and, nearly touching on the other side in a single day. These might be weekly ranges, but when price moves, it can take the whole range in a single shot. Especially after we've been, winding up. You can see a little bit of tightening here where we started out with a wide day and then it got more narrow and more narrow, higher lows if we're using TPO and nearly equal highs. This is compression. I would have liked to focus on compression when we've got, an IX10 with a very narrow range and then we expand out of it. Or here with an IX10 in a very narrow range and we expand out of it. This isn't so exciting because it's a very wide range, but then you get multiple days of doji indecision and these higher lows showing that compression. Today could be a very expansive move, even if the profile, looking at the volume, the floor pivot channels, those suggest that today's not supposed to be an expansion day. We'll see. This says we could do it. If we look at reversals on the 10-day, when we're not messing around with that 1.5 zone, we've also got this kind of 0.5% area. So we're coming into that. We could overshoot it. It's not set in stone. It's the idea that before we even get to a 1% expansion away from the 10-day, that we could stall out, reverse, and fade back again. Still looking at the 10-day, we can say we're not overbought, we're not overextended, we haven't moved too far, too fast, and that makes sense because we've been stalled for 2 days. Looking at the 10-week, we can see we're nowhere near our average, which is above 2%. That's been the average since this QRA event back in November, that we've been able to maintain above 2%. So we're still focused on getting above 2%, getting away from the 10-week at a distance greater than 2% and maintaining that distance. The 10 tends to act like a magnet. So when we stayed away from it for a long time, it was great. It was easier to stay away from it than it is to get away from it once we go back and start getting around it. We can see that historically looking back. When we stay away from it, we tend to hold that for quite a while. Then when we get tangled up in it, we can stick around there for a bit. We can look at what's up and what's down, but it's very likely that we're not going to get anything until after we get this data. So looking at things that are down, bonds are down. Well, let's say that different. 10-year is down. The 10-year note, the TNX. This early in the morning, I tend to look at the futures instead. TNX just tends to, not show up. It'll open at 8:15, I think. So we'll start to see it. So just use the 10-year for right now. We've been watching the 10-year for that drop after tagging, 4.6, 4.5 area. Still watching that fade. So like we've talked about before, when you have a low or a pivot and you're coming back to that pivot, double bottoms and double tops are traps. A double bottom would be a bear trap. A trap needs to be convinced, right? It won't trap anybody if it doesn't look convincing. What bear in their right mind would short it before we get through that support level? So if it's going to be a bear trap, we have to break that support level to convince the bears we're actually going down so that they'll get in, so that we can then do a rug pull and squeeze their heads until they pop. So we need to break this if it's a double bottom. How far do we go through that level? Well, I like the 111. And maybe as a line in the sand, I like the 1, 2, 3, 6. If it goes lower than that, then it's not a double bottom. We're just expanding to the downside. The thing is, if it bounces on this level, well, that's not a double bottom. That's an inverse cup. And an inverse cup, we would look for a handle before expanding to the downside. So we would expect a bounce, a failure to get back up to the halfback. Usually it's 1/3 of this distance. So just cut that into threes. A bounce into a 1/3, that gives us the handle, and then the move to the downside. So we don't know yet if this is an inverse cup and handle or if it's a double bottom. There's the 111. Maybe as an overshoot, there's the 1, 2, 3, 6. If yields are down, bonds are up, right up into this resistance level, but we've already broke through it. So unlike looking at the 10-year, where it hadn't yet broke through, TLT has already broke through. We're now getting into that 111. This is more sloppy looking than the other one, but it's still a double top, and we're going through that level right now. So we want to see how it reacts at this 111. We've had some really big gaps, especially this one down here. That's a very bullish signal. When we close below the 50% mark, and then in the overnight hours, we rally up completely outside of the previous bar. We open completely outside of it, and we don't get down into that previous bar. That's a very bullish signal, and it's been bullish all the way back up. But we're at the top of this zone. And now we need to resolve it. 93.5. If we can get above 93.5 and close above it, then we've got a chance to keep going. Otherwise, it could just be a double top. All right, we're getting a little bit of a tell here, nice and early. This isn't always something that works, but it is something that I've focused on more and more lately. The 10-year and the 2-year, when we've got econ coming, will oftentimes give you an early warning of how the econ is going to go. This is too early. It's only 8, and we're expecting the data around 10. So if this was a morning where we were getting data at 8:30 and I was seeing the Dixie fall like this and the 2-year fall like this, I would be expecting whatever econ it was to be bullish even for a short duration. But the thing is, this is too early. The other thing I don't like about it is everything is falling. The ES is falling, the dollar is falling, the 2-year's falling. That's not the way it's supposed to work. And this isn't the only time we've seen this. So we've had it a lot this week where we've had some odd moves in these tools. This is not right. So proceed with caution between now and the econ that we get at 10. And the cumulative delta is still pointing straight up on the ES. I'm looking at it on another screen, but it's not red at all. It's not even registering this pullback. $53.32 is a cog line. One thing that we can play today while we're waiting on econ is crude. Looks like we're about to get a breakout of the RTH high. It's not yesterday's high. It's just the yesterday's RTH high. But still, if we get a breakout here, that'd be a nice play. We can at least run it to yesterday's high. If we fail to get this breakout here, then we can play the range, trade it back down to the other side, at least to our own Globex low. Looking at what's up, semiconductors, the FANG stocks or MAG 7, more semiconductors. Emerging markets, which it was a little bit of a rebound on that India drop. MAG 7 again. China ADRs, Bitcoin, just plain old regular everyday tech. I noticed IGV is up this morning. That one's a little, you want to be careful with IGV. Yeah, okay, we don't have it this morning, but the reason I say you got to be careful with this one, it has a habit of moving after hours. So, we close at 4, it moves after hours. and then it doesn't move in the pre-market, but the pre-market will still register that difference from where we closed at 4 to where it was after hours. We could be down and it wouldn't register it. So you always want to just go and manually check if you're using Thinkorswim. On other platforms like TrendSpider, it tends to be more accurate with its mornings, and it'll actually differentiate between after hours and pre-market. But Thinkorswim, it'll lump all of that into trading hours versus non-trading hours, and it'll say it's down or it's up based on where it was at like 5 o'clock last night, not 5 o'clock or 6 o'clock this morning. The other thing about IGV, and it's not just IGV when it comes to this, we don't just want a little mark like that. That's just like an algo print. We want to see actual candles being developed, showing some flow there in the pre-market. If we have candles, then it at least shows flow. If we just have these little dashes, that's just like dark pool algo print. It's nothing. Noise more than anything else. So we do have some good things that are up this morning. They just need to stick, right? It's not enough yet. But the right space. We've got tech up, semiconductors, China ADRs, Bitcoin, the Mag 7. That's exactly what we would want to see for a bullish day. SPX 5350, 5357 lines up well, especially for a 1, 2, 3, 6. Now, we don't have today's ADR on the SPX. We won't get it until we get to the open. It's a Thinkorswim issue. If you're using TradingView, that might be different. You could see an ADR level there. But Thinkorswim, nope. Pot stocks are also up this morning. And gold miners. I didn't see silver in that. There it is. Silver is barely up at all. With Bitcoin being up, we should see some of these proxies up. So Riot, Mara, Hut, Hive, Coin, MSTR. We could have an expectation of those being up. Riot's up a little bit, but it's inside day and it's a really big day. Not really excited on this until it at least gets through that half back level, which it tried to do already and failed. Mara also up, also still inside day. Let's get that inside day breakout first. So above 2130. coin, not just yesterday's high, but last week's high. Looks like it's around $250, 249. It's close enough. Got to get through that if we're going to get a breakout in this. It started out good. It's up already, but it failed to keep this inside day breakout. That's usually not a good sign. If we get outside of yesterday's range, we want to keep it. We don't want to give that kind of a move up, and it already did. So that's not cool. So the Bitcoin proxies are up. Pot stocks are up, but really, I mean, barely. We want more flows here. I went with MSOS, but you could check, ACB, Tilray, MJ. Same thing. We need an inside day breakout. You're not going to get an inside week breakout anytime soon, right? We've got to get all the way above 8.25, 8.25. And this is a beaten down trash. So even if we do get an inside week breakout, there's still so many resistance levels above. We're just talking day trade stuff. Gold and gold miners, yeah, they're up a little bit, but we can see that still trapped inside day. Has a lot of work. Just getting above that halfback is a good start, but we got to get above, call it 218 for a really clear print. And for an inside week breakout, 218.5. China ADRs. BABA, Baidu, JD, PDD. So we can see BABA trying to get outside of yesterday's range. It's working on it. If it can manage that, then we can focus on getting through last week's range. But that's 81.72. Now looking at it on the weekly, we're on the 10-week, the 20-week. We found all of that as a support level. Again, we had it last week. We tested it again this week, but we have the 50 period. That's a 50-week moving average overhead. So even if we get up to where we started the week last week, that 80.72, we still got another $1 to go, and it's right underneath all that 50 period moving average. Still, for an intraday, we got the inside day breakout. We just got to keep it. Baidu, same thing. We're up in the pre-market. This hasn't even managed to get outside of yesterday's range yet. So get that accomplished. Then we can focus on getting outside of the week. This has been just a beautiful step-by-step move to the downside. And it shows, their work, right? Where we gap down, they run it back up, gap down, run it back up. They do this so that it's not too many big candles in a row, right? They got to lure people in so that they can continue to unload. If every day looked like one of these big red candles, then they wouldn't get any suckers to try to buy it. This is still just an up move for the day. We got to get that inside day breakout to stick. We haven't even managed to get outside yet. JD, another China ADR. Working on that inside day breakout. So far, it hasn't managed to keep it. That's a really nice dark pool print. It doesn't bode well, though. We'll see. 30.09 is the halfback, 30.61 for the breakout. And PDD is the other one for the China ADRs. This isn't participating, so I would not mess with this one unless it can get outside of yesterday's range. But look, it's headed to the downside, and all the other China ADRs that we were looking at were trying to break to the upside. So I wouldn't mess with this one unless first it gets above the halfback, second gets above the inside day. Now there's another approach to this, and that would be taking it long off the low. I don't like shorting in the hole. So going long off this low, this 144, one, it's a round number. It's not, one of the better ones like 150, 200. It's not that good, but it is a full dollar value. Two, we saw their defense yesterday a little bit. We could anticipate that same sort of defense today. We could look at a volume profile and see how much volume there actually was traded down here. Watch the level 2 and the tape in the dome when we come down into this level to see if we get that buying as a defense to run it back up again. It'd be the lowest risk trade that you could take to go long off the low. Now, low risk doesn't mean high probability. Those are two different things. If you take a trade without confirmation, then you're getting in early, right? You'll make more money than the trader who waited for confirmation, but you'll lose more often than the trader who waited. We've already talked about winning versus losing. I don't care about winning versus losing. I care about how little was my loss and how big was my win. An LRE has really nice payouts when you're right and low, small losses when you're wrong. So if you are thinking about playing the China ADRs, you could think about going long PDD off of that support. It's not a very strong support, by the way. Otherwise, you're stuck waiting on the clock. Semiconductors, pot stocks, emerging markets with China ADR, tech, gold, crude. That's it. We're just waiting on the clock. Everybody, be careful, be safe. Have a good day. I'll see y'all tomorrow.